Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, pound dollar, the majors for May 14, May 18, 2018. And really next week could be the dead cat bounce week. We certainly saw a bottoming out of both the euro and the pound this week and a topping out of the dollar yen. So certainly we have a chance for extension of this counter trend rally in the dollar as the week progresses. The levels have moved down a little bit in the euro. We're now trading 118 support, 120 resistance, and probably, as we'll see in the charts, resistance could go as high as 121 on that level. Dollar yen still in this 108, 110 corridor, very, very key levels, and we have to watch the downside here because if the downside gets broken, that's really the big danger for dollar yen. And pound dollar, of course, really building a very, very strong base at the 135 level, but this week could be a tipping point depending on how the data goes into the middle of the week. Let's take a look at the data set before we get into the charts. So on the major side, European data, we have GDP numbers from Germany, not really anything much on the European data. Industrial production, sort of second tier stuff that nobody really is going to pay much attention to. Final CPI data, and nothing else on the European side that's of any real serious import. As far as UK goes, the big event, and really the big event in the majors this week, will be the UK employment data. Employment has been the one bright spot as far as UK data goes. The real wage growth has finally turned positive, and we're going to be watching this very carefully. We're actually negative, this data set, because employment component of both manufacturing and services declined, which suggests that maybe labor data is finally going to start rolling over and pretty much put the kibosh in the idea that the BOE is going to raise rates anytime this year. They came in with a very, very sanguine position last week on the idea that all of the UK economy was essentially weather-driven. But if the data doesn't bear them out, it's really going to be very interesting. After the UK claimant count data, there'll be testimony in front of Parliament by Carney, and that's going to be very interesting because if the data does not support his bullish view, it'll be interesting if he'll really sort of pull off the idea that they're going to raise rates in the near-term future. Anyways, cable looks to be either a basing trade or just simply a pause before we get a fresh fall-off. So we're going to watch that very carefully. The other big data set on the major side is the U.S. retail sales. U.S. retail sales have actually been generally weaker over the last 5 to 6 months, weaker than expected. Certainly the idea that tax cuts were supposed to drive retail sales have not materialized. But we are mildly bullish on the retail sales. The key question, though, is how will they be ex-auto, ex-gas on the core basis, and whether you start to see the consumer sort of pick up steam. Consumer sentiment data today on the U of Michigan was mildly positive. So there's a chance here. I think if they come in at forecast, that certainly stabilizes the dollar. If they come in weak, that really could take the dollar below the very key support level. So let's take a look at where we're at as we close up the week. You see the euro clearly finding support at the 118 level here, and we're bouncing back. And it really seems as though everybody's waiting for the 120 to break because that's really where the fresh shorts want to establish their positions. The shorts probably going to want to establish positions around 20 to 21 on a retrace move on the hope that the euro then comes back down. Certainly on the fundamental side, there's nothing positive on the European side. Inflation has been muted. Demand remains relatively soft. Slowdown in the second half economy. Zero chance that ECB is going to move off and normalize policy anytime this year. So the rate differential, all of those things really are not playing in euro's favor. And it really becomes a question of whether does the dollar have any potential to go up, because euro really is going to rally back up on dollar weakness, not euro strength. So the dollar weakness issue really comes to the forefront, I think, next week, because if retail sales disappoint, we so far we broke out this 108 level and have been just basing for the last good 2 weeks between 108 and 110. The 110 failed twice. We haven't had enough juice to take us to 110 twice over the last week. And that's a pretty ominous sign, because if we start to drift all the way below the 108.50 and actually come back and touch 108, that becomes a much more ominous sign, because now we turn from essentially a breakout consolidation mode to a double top pattern, which then suggests that we could unwind all the way down to back to 105, which will kill dollar longs in their assumptions. A huge amount of dollar longs got long here on this breakout. They're basically holding by the skin of their teeth. And if the prices start to tumble back again, it's going to force a lot of these dollar longs to liquidate. So I'm watching this very carefully. Certainly, technically, the dollar picture does not look nearly as bullish as it did last week, and the failure this week is very ominous. And then last but not least, here's cable. Cable, you can see really very clearly starting to build a very, very strong, there's just a huge amount of buy up underneath the 135s. But the buy up underneath the 135s is really based on the assumption that interest rate delayed, not denied. And if this week the labor data comes in soft, and perhaps the market is going to have a realization that interest rate denied is going to be the much more possible reality going forward, this trade could start to really filter to the downside. So a lot of pivoting levels here, both in cable and in yen as we start the week, and we see how things shape out as we go forward. Wish you guys the best luck, the best trading. Boris, over now.